But the real challenge for me, quite frankly, it's not necessarily getting the stock calls right, though that's important and you certainly want to do that. It's really figuring out ways to consistently provide value for my clients. Because to be clear, there's a lot of other people out there who do what I do, right? And for some of these companies that I cover, particularly the larger companies, they can have 30, 40 other analysts who are covering those companies. And so I have to give investors a reason to care what I think about, just an example, Best Buy or Dollar General or Dollar Tree or Shopify, as opposed to what the other 30 analysts think.
Welcome, everybody. My name is Haresh Singhani. This is Conversations with Haresh. We'll be talking to people of varied backgrounds, covering various topics. I'm very excited to be able to share these with you. The goal is to increase curiosity and empathy amongst all of us to help us grow professionally and personally at all levels. And of course, we also want to make sure that this is fun. So thank you again, and we'll look forward to having you. Good afternoon, Anthony. Welcome to Conversations.
Good afternoon, and thanks so much for having me. Looking forward to it.
Yeah, it's wonderful to have you. I was excited when we saw you at the conference a couple of weeks ago. As I mentioned, this is a project I've been on, Conversations, for about a year, and we're inviting interesting people from different domains. So excited to have you here. Just as we get started, you've had an illustrious career in equities and other aspects of finance. And of course, personally, all of us have had a journey. You've had a journey. So if you want to just give us a little bit of an overview of Anthony, maybe we can then pick into a couple of topics afterwards accordingly.
Sure, absolutely. Happy to do it. So, let's kind of start at the beginning. I mean, I am the middle son of Nigerian immigrants. So basically my mother and father, so Bridget and Stephen, were actually born in Nigeria, grew up in Nigeria, met in Nigeria, got married in Nigeria, and ended up moving here to the U.S. My father was in the Nigerian diplomatic office. So I was actually born in Washington, D.C. Now, after I had been born, there was a civil war in Nigeria, and my father's tribe was on the wrong side of that war. And so going back to Nigeria was suddenly out of the question. So basically, he pivoted and started a PhD program at Georgetown University. So he got a PhD or African American history from Georgetown University. We then moved to New Jersey so that he could begin teaching at a college there. And that's basically where he ended up retiring from. So even though I was born in DC, grew up in New Jersey, I think I had a, fairly typical, childhood. I mean,
were you in the metro range of New York City, or were you outside of that?
We were in central New Jersey, so we were sort of very suburban area, kind of equidistant between New York and Philadelphia. So call it a little over an hour south of New York City, about, a little less than an hour north of Philadelphia. So, my dad was always pretty religious. So I went to Catholic school basically from the time I was in kindergarten through the end of high school, ended up going to Rutgers, the State University of New Jersey, for undergrad. While I was at Rutgers, I was actually an accounting major and, pretty much thought that I was going to end up working at a public accounting firm. As a matter of fact, I was actually president of the Accounting Society during my senior year. So yeah, I was clearly very, very cool. Anyway, I became interested in Wall Street while I was in college. And I want to be very clear why I was in college, right? Like I wasn't one of those folks who, was investing in stocks when they were like 10 years old. That was definitively not me. I still don't even know exactly what got me interested in Wall Street, because it wasn't like there were people in my family who worked on Wall Street or people in my community worked on Wall Street. I mean, literally, it was like from watching movies. I saw the movie Wall Street. It looked really, really cool. I saw a movie called Working Girl, which I am like a Working Girl stan. I talk about Working Girl like all the time. The summer between my junior and senior year, I got an investment banking summer internship. And I was in the mergers and acquisitions department of a bank called Payne Webber, which, was later acquired by, if I remember correctly, it was UBS. I might be making that up. And I remember it very vividly because literally it was my first week of work and the office was in Midtown Manhattan, it was on 6th Avenue. And they had never really had interns before, so they didn't quite know what to do with me. So I wasn't doing a whole heck of a lot of actual work. But there was just something about just the energy level and the way that people looked and talked and dressed and their educational backgrounds, just the energy where I was just like, this is it. This is what I want to do. And so, he was able to parlay that summer internship into a full-time position after school. So I was in the mergers and acquisitions department of Merrill Lynch right out of college. So yeah, I did that for a couple of years, had a fair amount of success at a junior level. Always had envisioned that I was going to go to business school. I'd actually started to kind of prepare for that even back when I was in college. So, went to business school. And after business school, I went back to Merrill Lynch as an investment banker again. I was an associate, so I was a little bit more senior. And I was actually in a group where I worked specifically with retailers and apparel manufacturers. So I was no longer doing M&A. I was doing what we called corporate finance. So that's a lot of capital raising, mainly, so a little bit of M&A, but all specifically with retailers and apparel manufacturers. So did that for, another 4 or 5 years. And then I moved into industry. I, left investment banking, moved into industry, worked for a couple of years for Sears. My title there was business finance manager. It's kind of like a junior CFO working with a few different divisions. Didn't really like that. Had gotten interested in equity research while I was an investment banker and basically switched into equity research. So spent the first couple of years working at Morningstar. So, the company that, originally was mainly known for their mutual fund ratings. I was actually covering equities there. Not really, an institutional product. Like it really wasn't for institutional investors like hedge funds, mutual funds. It's really more for individual investors. Like you could buy a subscription to their website and you could access all of our research, and knew that wasn't really kind of like my end game. Knew at some point I wanted to move over to the institutional level. And basically, my next big break was that there was a firm, a boutique that had been around for quite some time called FTN Midwest Securities. And basically what happened was there was this kind of schism at the firm where a bunch of folks, like a bunch of people, all left at the same time to form this competing firm. And there were still a bunch of people that were still there. And so the people that were still there at FTN, they needed to hire a bunch of analysts and they need to hire them quickly. And so they brought me on as a senior analyst, which by the way is not typical. Like typically for folks who are just getting to equity research, you start as what's called a research associate. So almost like an apprentice to the senior analyst. But I just skipped that because they were desperate. And I was just like, okay, you know what? I'll fake it until I make it. And that was at this point, 16, 17 years ago. And I'm still here. I'm still doing it. So that in a nutshell is my story.
Wow, very interesting journey. Going back to your accounting, the question that comes to mind is why isn't accounting more cool, or how can you make it cooler, right? Because now this has led you to this very consequential role professionally, right? But that was the start. And I'm sure that background has played a role in making you successful as an analyst, right? Because you can't analyze opportunities and businesses and domains without knowing the basics of how books are maintained and so on. So I'm curious kind of how it has such a dry reputation, the discipline, but yet it is extremely consequential. And I know you're on several boards and so on, so you're probably talking to people or faculties that are teaching accounting or other things in education. So my question is, how do we make it more appealing and get more people interested so that they could actually be more responsible leaders and persons?
Yeah, that's a great question. So look, I mean, first off, you're completely right. And it's funny because first off, I use accounting every single day, literally every single day. As a financial analyst, as a equity research analyst, a big part of my job is not only analyzing financial statements, right? So income statements, balance sheets, but also projecting financial statements. Like literally for every single company that I cover, I have a model in which I'm projecting how much they're going to earn over the next quarter, over the next year, over the year after that type of thing. That's all accounting. It's just literally all accounting. And so it's funny. I literally tell college students, because I definitely, I talk to a lot of college students. I mentor college students. If you are interested in having a career on Wall Street, particularly investment banking, don't major in finance, major in accounting, major in accounting. And the reason I say that is that the finance, particularly if you're talking about like investment banking, I mean, don't get me wrong. There are, if you're doing like quant trading, stuff like that, I mean, it can get very sort of quantitative and theoretical, right? Very esoteric, but like for what I do, not esoteric at all, like at all. So in a lot of ways, the finance stuff you need to learn, the finance stuff I use in my job, very, very basic stuff, very easy to learn on the job. The accounting stuff, much more difficult. And so to have that classical training, right? That background, it's incredibly important. The other thing is like, look, I think that accounting can be really cool if you're the CFO of a company. But if you're just like a junior accountant or let's just say like a public accounting doing like auditing, not real cool. Not real cool. Now, here's the thing though. I mean, it can definitely be a springboard though. It can definitely be a springboard. And I certainly know folks who started, working for one of the big public accounting firms and then moved over, to working at a company and then kind of moved their way up, to that, kind of treasurer, kind of CFO level. So I think it is dry. It is somewhat monotonous, but it is a very strong foundation. So maybe that's the way you almost like rebrand it. It's like, yeah, you're an accounting major, but like analyzing financial statements, I mean, you can use that for a lot of different things.
Right, right, right. Maybe another thing also is that not everybody has to change their major, but it's more, you should be more accounting aware or savvy. Not everybody has to be an accounting major, right? But I think it would be interesting to get more people to be accounting savvy or accounting aware so that they could actually be more effective in whatever roles they are playing, right? Because there's no leadership role that doesn't involve some sort of resource allocation and resource management. So leaders need to know a lot of different things, but it seems like if they knew more accounting, they could be more effective. Just like when we talk to engineers and scientists, right? In some ways, if they know more engineering and more science, especially product leaders, they could be more effective as well, right? So now you are doing research.
Yeah, so let me just sort of describe my job a bit. So I cover retail companies, specifically 22 companies. So for each one of those companies, essentially I'm a subject matter expert. And the vast majority of them I've covered for many, many years. Some of them I've covered for, literally well over a decade. And so I understand a lot about these companies. I spend a lot of time in their stores. I understand the industries they're in. I understand the macroeconomic variables that impact their business, who their target customers are, the management teams, competitive landscape, all that type of stuff. And so these institutional investors, these hedge funds, these money managers, they're coming to me. So it might be like, hey, Anthony, I'm interested in Best Buy. Like, what do you think about Best Buy? Like, what should I be thinking about? So, and I'll say, okay, yeah, I like Best Buy. Here are the reasons that I like it. Here's what I think about the strategy. Here's what I think about the pricing. Here's what I think about the competitive landscape. Here are products that are coming out that I'm excited about. Here's what the balance sheet looks like. Here's, my assessment, their management team, so forth and so on. Now, I do for every company, back to your question, have a rating, and it's either a buy, a sell, or a hold. So a buy basically means, given where the stock price is right now, I believe that there is significant upside. I believe the stock is worth more than where the stock is right now. A sell is the exact opposite. Given where the stock is right now, I think it's overvalued. I think you should sell the stock or maybe even short the stock, bet against the stock. A hold basically means I think it's, pretty appropriately valued. Now, there are investors who they will come to me and say, okay, Anthony, like I'm looking for new ideas right now. What are your favorite long ideas? What are your favorite short ideas? So that's definitely a big part of the job as well. But as a subject matter expert, like my product, the primary product is research reports. So I write research reports on the companies that I cover. And they're all types of different research reports. So, for example, I'm in retail, so I do a lot of pricing work, right? Do Best Buy's prices compare to Amazon's prices on, 50 exact like for like items? How do Dollar General's prices compare to Family Dollar's prices compare to Walmart's prices on 30 exact like for like items? I do a lot of store visits. So I'll go to a bunch of different stores and just report on what I see in terms of the quality of inventory, store conditions, store associate engagement, stuff like that. Some macro stuff. So I have like a monthly report where I track a bunch of different macroeconomic indicators that I think are tied to consumer spending. I do quarterly earnings recaps. So publicly traded companies report earnings every 3 months. And so I'll do a report in which I'll say, okay, here's how they did versus how I thought they were going to do. And here's kind of what I think it means for the stock. And so that's a big part of what I do. And when I write reports, they get automatically sent out to our institutional clients that have indicated interest in those particular companies. I'll call clients. I'll make outbound calls to clients. Typically, when I've written a piece of research and said to, just kind of give them a heads up. Hey, just wanted to let you know, I came out with this pricing study. Kind of here's at a very high level what I think it means. I get a lot of inbound calls and emails from clients. So they'll have questions on things and I'll address those. Do what's called providing management access, where essentially, because I have these longstanding relationships with the management teams, they will sort of partner with us, to have us set up meetings for them with institutional investors, because theoretically they could do that on their own, but we can sort of curate for them. And then I can also sit in on those meetings to learn more about the company. So that's another thing we do. And then another thing we do is what are called expert calls, where there might be an issue going on with one of my companies, where even though, I cover all these companies, I'm not in the field, right? I'm on the sell side. Sometimes we will seek out experts on particular issues, and we will basically fireside chat type calls with them, where we will ask them questions related to whatever the issue is that we want to delve into. So it's really the combination of all those different things. And look, there are some clients who really just value the research reports. There are other clients who really value the management access. There's other clients who just really value the customer service. And, most clients will value some combination of that. But the real challenge for me, quite frankly, it's not necessarily getting the stock calls right, though that's important and you certainly want to do that. It's really figuring out ways to consistently provide value for my clients. Because to be clear, there's a lot of other people out there who do what I do, right? And for some of these companies that I cover, particularly the larger companies, they can have 30, 40 other analysts who are covering those companies. And so I have to give investors a reason to care what I think about, just an example, Best Buy or Dollar General or Dollar Tree or Shopify, as opposed to what the other 30 analysts think.
Okay. When you say sell side, you're catering or servicing the sell side. So who are these institutions? Not to name names, but, categorically.
Yeah. Okay. So basically in equity research, there's essentially what's called the sell side and the buy side. I'm on the sell side. So buy side, those are the folks who are the actual institutional investors, right? So they are long only funds, like essentially mutual funds, like a Fidelity, a Wellington, a Capital Research, Neuberger Berman, a bunch of that you never heard of before. And then there are what are called long short hedge funds. So where long only funds can really only buy stocks in the hopes that the stock prices are going to go up. Hedge funds they do a lot of that. Quite frankly, they mainly do that, but they do also have the ability to bet against stocks, right? To bet on stock prices going down, which is called shorting stocks. And so, big, hedge funds out there are like Point72, Millennium, there's one called Astro Capital. And so, yeah, we service both long only, and long short. And yeah, virtually any large institutional investor that you've heard of is a client of ours. And there's a ton more that you've never heard of that are clients of ours as well. My first big break was because of conflicts of interest, right? So prior to the dot-com implosion, investment bankers, and remember at the time I was an investment banker, worked very closely with research analysts. Looking back in retrospect, too closely with research analysts. Like investment bankers definitely had undue influence over research analysts' ratings. Where the proverbial crap hit the fan was when it came out that a number of analysts, highly paid analysts, were writing one thing about companies, like essentially going out and saying, oh yeah, I have a buy on this company. I really believe in this company. But internally, they were sending emails saying the exact opposite. I'm just literally denigrating these companies. And so, the attorney general, the New York attorney general at the time, Eliot Spitzer, basically he came down on all these companies. And so there was what was called the global settlement. And what that said was that you had to completely separate equity research from investment banking. You had to eliminate those conflicts. Now, the way that I got involved with that was that as part of that global settlement, a large number of investment banks, a bunch of big investment banks for the most part, they had to provide independent equity research for 5 years for every company they covered, and they had to pay for that equity research. Well, what does that have to do with me? Well, Morningstar, bid for a bunch of these essentially 5-year contracts, to provide this independent equity research. They actually got a bunch of those contracts, and thus they needed to quickly staff up in terms of equity research analysts because Morningstar's coverage had to mirror the client's coverage. Basically, that's why they were looking for equity research analysts, and that's how I got my first job doing equity research. But yeah, at this point, conflicts of interest, I'm not going to pretend that they don't exist at all. I will say that it's very, very rare. I mean, there's just a lot more compliance. Everyone knows the rules, and everyone, for the most part, adheres to those rules.
This raises in my mind another question and this may be slightly outside of kind of your core focus, which is high-speed trading, which is essentially also, as a layperson, I think that's a conflict of interest.
I don't have a strong view. I mean, look, I read Flash Boys just like everyone else did. It definitely seemed to me that, something doesn't smell right here, right? The fact that someone can, just trade a little bit quicker and so they can make all this money off of that just doesn't sit right with me. But it's one of those things where I don't necessarily know enough about it to have a strong opinion.
Actually, I was talking to one of the advisors at High Tech Advisors. Actually, he used to be Dean of Business School for one of the universities, and he just moved to California. He's the Dean of Business School for Cal Poly at Pomona, I think. And he was talking about this anecdote where there were a bunch of accounting deans in a room and they were all scared because they thought AI technology would render a lot of the accounting tasks redundant. So I'm just curious, any thoughts or any observations you have around AI?
So to be very clear, I don't feel threatened by AI at all. Maybe I'm a little bit naive, but I don't really think so because the value add for what I do. So let's say, for example, a company reports earnings, right? Could AI, sort of like write up a recap of the company's results? Yeah, I'm sure it could, and it'd probably be reasonably accurate and reasonably similar to what I would write up. But like, that's not the value add. Like, no one's paying me to, recap Best Buy's earnings. What they're paying me for is to come up with differential insight, right? To help their process, right? I mean, can AI go into a store and, take a bunch of pictures and check inventory levels and, talk to suppliers and do things like that? As of right now, not so much. Now, maybe they'll come out with humanoid robots at some point, but, or even like, okay, so company reports earnings. So I have to update my model, right? Like I had an estimate for the quarter. Now I have to turn to an actual. Could AI do that? Absolutely. But once again, that's not the value add. The value add is saying, okay, this is how the company did based on all the information I have. Like, how do I think the company's going to do going forward? Because that's what's much more important. What are my estimates going forward? Right. So that's where I don't really spend a lot of time worrying about AI. I mean, is it possible at some point AI can replicate a lot of things that I do? Maybe, but I'm fairly certain at that point I'm going to be retired and then I'm not going to have to worry about it at all.
Well, we've covered a lot of different ground, I guess, and whatever has come to my mind, I've just asked you, and you've been giving us very thoughtful answers based on your experience and insights and so on. It sounds like a lot of the careers on Wall Street or in finance or investment banking or equities and equity research, they appear to be high stress.
One of the ways I manage stress is the fact that I am an equity research analyst and not an investment banker, right? Particularly when I was right out of college and right out of business school. I mean, I was working 90 to 100-hour weeks. I mean, I would pull all-nighters like all the time. And, and that was okay when I was in my early to mid, even sort of late 20s. But like, I mean, I can't even imagine doing that now. So that was one way. Like by doing what I do now, I just have a better work-life balance than I used to. And then even, like I said, I'm a sell-side analyst, not a buy-side analyst, right? So in other words, I am advising these institutional investors, but I'm not putting money into these. Blue Capital doesn't invest based on my recommendations. And that's important because, as I said, I have buy, sell, hold ratings on all my stocks. If I have a buy on a company and the stock price is doing really poorly, I don't love that, right? It's not great for me, but Blue Capital doesn't lose any money because I made the wrong call, right? If I'm on the buy side and I own $100 million of a stock and the stock price is down 20%, which can happen, and I just lost $20 million for my firm, that's pretty stressful. But in terms of what I do outside of work, I do have a wonderful wife and, and 2 kids. So that definitely helps me de-stress. I've, basically since I got into my early 30s, I started exercising on a very regular basis. So, I run probably 5 days a week. I ride my bike a couple days a week, probably lift weights like one day a week. So that's definitely a great de-stressor for me. I read a lot and I'm constantly reading something. And, sometimes it's books about Wall Street. Sometimes it's about politics. Sometimes it's about comedy. I mean, I'm just always reading something. Okay. So I just read a book called Broken Money. And I guess it's kind of popular in kind of the crypto circles. It's basically this economist who makes her basic argument is that fiat currency is hopelessly broken and inflationary, and so Bitcoin is a much better alternative. It was actually recommended to me by a colleague who's like all in on Bitcoin. But right now I'm literally reading a Charlie Murphy biography. So Charlie Murphy, I mean, he actually unfortunately passed away a few years ago, but that's Eddie Murphy's brother. He was on the Chappelle Show, and then he was also a big stand-up comedian. So I read all kinds of different books, but I only read nonfiction. I don't read fiction at all. And I'm also it's ironic because we're recording a podcast right now, but I am a podcast fiend. I listen to hours of podcasts every single day. Part of that is I'm sort of combining things, right? So when I'm running or when I'm riding or step out of the office to, grab lunch to bring back to my desk, I'll, listen to a few minutes there. So I definitely have ways to decompress.
Do you drive or take the subway? How do you get around to the office?
One of the great things about living in the Chicago area, we have wonderful public transportation. So I take a commuter train. The train station's maybe 10-minute walk from my house. Then when I get to downtown Chicago, and just depends on how much time I have, but I can walk. It's about a 15-minute walk. They have those share bikes here. I'm sure you have the same thing in Seattle. So if I take one of those, it's like 5 minutes. As a matter of fact, this morning I jumped on one of the share electric scooters, which I normally don't do. And, or I can even take a cab. So it's very manageable.
Sounds like overall a fairly good setup you have between family and having time for some other interests and professionally working in an exciting domain, working with exciting people, probably at the office, but also people that you cover in different companies, right?
That is a wonderful question. So there's only really one piece of advice that I would have given differently. I would have said, like, right out of business school, go into equity research. Like, that is the one mistake that I made. That is the one mistake that I made. I just wish I had gotten into equity research earlier than I did. But aside from that, I mean, things have worked out pretty well. I mean, I think it'd be unfair to say that I planned my life out like way in advance, but I definitely at different stages of my life always sort of had a plan. Like maybe it was only a 3 to 5 year plan, but there was a plan, right? So in other words, even when I was in undergrad, I was reasonably certain that I wanted to have a career in business. Now, I didn't know exactly what that was going to entail, but I did my research and I was like, oh, okay, if you want to have a long career in business, you need to get an MBA. So that became part of the plan. And then even when I got my MBA, I knew I was sort of like, okay, I know I don't want to do investment banking like for the rest of my career, but it probably makes sense for me to do it now because there is more things for me to learn. I can make some pretty good money and I can sort of figure out then where I want to go from there, right? So there was a plan. And even when I went into, when I originally went to Sears, and when I went to industry, the plan was, I was going to try to get on a kind of a CFO track. Now the plan changed, right? The plan changed, but I had a plan. And even when I went to Morningstar, the plan was, okay, I'm going to do this for a few years so I can get into the institutional business, right? And now, quite frankly, the plan is to run out the clock, basically. I mean, don't get me wrong. I'm still working hard, but like, I can see the goal line is in sight. To be clear, we're talking about retirement, so there's always been a plan. But that is the one thing I would have done differently is I would have gone into equity research right out of business school.
I see. Okay. And I know you're involved in educational institutions now in different capacity, right? Maybe more than one.
Yeah, through some charity work that I do, yes.
So what are you telling the young people?
Yeah, I mean, I talk to a lot of young people, and here's what I tell them. And a lot of this was based on my experience. Your college years, maybe even your high school years, they're incredibly important. They're incredibly informative. People are going to make judgments about you for the rest of your career based off of how you did in college, right? Maybe even in high school. So you got to take that super seriously, like really, really seriously. And I always say, like, look, no one's saying that you can't have a life. Like you just have to like study like all the time, but you can have fun, you can have a balance, but you have to prioritize the work, right? You have to prioritize the work. That's what I always did. I had, all joking aside, it's like I had a really good time in college, and I did really well in college, but it was, let's get the work done first, right? And then let's have the fun, right? And even, in my professional career, I mean, that's obviously different now because I'm, married and have kids, but like in my professional career, it was the same thing. I remember moving to New York, like right out of college, right out of business school, being young and single and, and at least after business school, having a, fair amount of money. And it was sort of like, okay, you know what? There's all kinds of fun things for me to do. There's all kinds of trouble I can get myself into, but I need to prioritize the work first. That's one of those things that I tell youngsters. I tell them all the time. I'm not saying don't have a life. I'm just saying prioritize, understand what's important and prioritize that, and then fit your social life around your educational life or your work life, not the other way around. The other way around, not going to work out so well for you.
So, Anthony, thank you so much. You've given us lots to kind of, think about and lots to hopefully be inspired by for some of the listeners. We'll look forward to having you another time.
Yeah, no, thanks for having me.